Okay, silver heading lower. Okay. Grayson, welcome.
Hey guys, good to be
How are
here.
you, buddy?
I
Hey,
am good. Hey, I haven't had a promotion in a while, but I haven't had a musical introduction ever. So, thank you for
see,
that.
Wow.
there's a
Yeah,
first for
see?
everything.
All right. Well, we aim to please. So
There you go.
you remember how to
Good way
share
to
your
start the
screen?
week. I
Yeah.
do.
All right,
Let me
Grayson.
go ahead and grab it here.
I tell you what, I mean, your stockcharts.com, I remember using it for basically just charts many
Yeah,
years ago. And what an evolution you guys have gone through. I
we
mean,
have. We
yeah, it's
really
like
have.
you have the who's who of traders every week.
I know we got quite the crew now. I know you've had David Keller on the
Yeah,
show a couple of times, and yeah,
yeah,
he joined us about a year and a half ago now.
yeah.
And no, I mean the list continues to grow. We're doing lots of great things on the content side and lots of great things on the product side. We're having a blast. I mean that's the most important thing, right? I mean if you're not
Let
having
let
fun, what are you doing?
Okay. And I want to ask you this because
Yeah,
to me, having guests like you and having a calendar and having interviewed 1,000
sure.
traders,
Yeah.
it's very, you know what, it gives me an edge. There are certain people whose work I really respect, and it kind of
hmm
gives me, they see things I don't see. Do you do a lot of intelligence gathering with contributors on stockcharts.com?
What do you mean intelligence gathering?
Well, you read their stuff and you find ideas that you didn't have on your
Oh,
own.
oh, yeah, yeah, yeah. I'm
Yeah.
I'm a sad case. I mean, you should ask my fiance. We're getting married next year, and
Well,
she doesn't know what
congratulations.
she's getting into because I get off work and I still stick around on stock charts, reading everyone's blogs and watching all the videos and all that. I mean, we do really have an incredible collection of people, that have been doing this for forever. I mean, guys like John Murphy that are sort of
Right.
a godfather of our industry,
Yes.
sharing their thoughts on the market and trying to really teach people through their work. I think that's the thing that we try to highlight the most is getting people that can really kind of teach, not just get up there and blab for a while, but actually kind of teach people and try to empower, readers and viewers and users and all that stuff. So yeah, it's sad. I mean, I spend way too much time on the site, but I love it because we got such great stuff on there and great people to learn from, and there's always something to learn. So that's a
Yeah.
good way of putting it. Intelligence gathering,
Yeah.
just
I'm a
brain
big believer
sharing.
in it. I'm a big
Yeah,
believer in it.
yeah.
So, Forex Gal says you have a nice radio voice. It's better than what, I get. Dale, you have a perfect face for radio.
There you go.
And,
There you go. It's
and
these microphones. They do amazing things these days, right?
yeah,
You get a
sure.
filter on there.
Yeah, sure. So we're looking at S&P's. It's not showing today's action where we're lower.
Right.
Um, this has been kind of a grinding, slow decline off here. What's your
Yeah.
take on this? I know under 3,400, it's going to look pretty vulnerable to me. What are you thinking here, Grayson?
Yeah, so I missed Blake's stuff earlier. I caught just the tail end of it, so I didn't get to hear what he was thinking about the S&P. But the line that I'm drawn across here, this is a 3-month, 60-minute chart, as you can see by the title.
Right,
The
right.
line that I just keep seeing us come back to is about 34.25 on the S&P 500. I mean, you've
Okay.
seen
Yeah,
us just battle test this thing. We obviously kind of jumped up to it here back in August, bounced around that level a little bit, went through it finally, and came back to test it. You can kind of see that just a
yeah,
little bit there. We rocketed higher up to all time highs over here in early September. But then once we lost it, we kept trying to test that 34.25 level and totally lost it in September when we had that pullback.
right.
As we've made the run back up in October, we've come through that nicely and we've come back to test it again now from the top. So I'm
Right.
seeing this 34.25 level as an incredibly important one to watch. And I love the fact that we've come back, tested it after falling through it, and now we've bounced off a little bit. We'll see what happens this week, but that 34.25 level to me is absolutely crucial. But I mean,
You
it
know,
really does sit kind of in a broader range that we're just bouncing sideways right now.
yeah, when I look at your chart, and I didn't see this on mine because
hmm
you're using a catch chart, but those
hmm
two candles that got through it intraday but did not close beneath it.
Yeah.
To me almost implies there could be one more, because I look for 3 drive formations,
Yeah.
and seeing this chart and today's action, maybe that's going to happen before we get a better rally. But yeah, you've identified a very important pivot.
Yeah.
What do you think going into the elections? Do you think it's prudent just to, sit on your hands and not try and predict a market reaction to something that we're not going to have an answer for?
Yeah.
Definitely not on election eve. And the markets also seem to be kind of comatose today going into it, even though we're down, like, not much going on.
Right.
Well, and when I had David on, he was saying there were some groups that were starting to outperform the S&P, which were kind of defensive in nature, like utilities and
There are.
yeah. So
Utilities especially. I mean, utilities actually is outperforming tech. I've got a chart over here. Let me pull it up. I'm scrolling around real quick, but I like to look at this. I like to look at this offense versus defense chart. And there's kind of a standard view that you can take where you do consumer discretionary versus consumer staple. Discretionary being more of an offensive sector, staples being more of a defensive sector. So if that ratio is going higher, it means that we're favoring offense. So when I see
right.
this blue line moving higher, that's kind of signaling that we're favoring offense overall in the market. This,
Okay.
though, is a cap weighted look at that ratio. So we can actually look at it in an equal weight ratio where we do the equal weight consumer discretionary versus equal weight consumer staples. And again, we see that going higher. So I love to see that. But like Dave was probably mentioning, utilities starting to outperform the S&P 500. And actually what's more concerning to me is utility starting to outperform technology. So that's what this green line is, technology versus utilities. And so when we see this, technology just clearly leading, that's great. I mean, it's a very offensive sector that's moving to the upside. When we see that break down, and so now utilities are actually starting to outperform technology, that concerns me a little bit. I mean, it might be just a bit of a rotation back to normal. I think we have run pretty high, and so maybe we're just rotating back to normal, kind of flattening out a little bit. But it's pretty aggressive the way that utilities have been outperforming actually in recent weeks.
Yeah, and we have our earnings report in some of the MAG or
Yep.
FANGs this week.
Yeah, you picked a good week to have me on. What an exciting one.
Yeah,
We
so
big
I have a
reports.
hard time wanting to take a position into earnings reports.
Yeah.
What's your discipline on earnings? If you own a position, you stay with it no matter.
Yeah,
Earnings or not.
It all comes down to the charts for me. I mean, I've got a lot of positions that I'm sticking with because they're continuing to do well quarter after quarter. I am pretty heavily positioned in technology, and a lot of those names have continued to do well even through the chaos that we've seen this year. So for the stuff that I'm in, I'm watching the charts. They're continuing to trend higher. They're continuing to sit nicely at good levels. The stuff that I own. So I'm not getting out of anything that's working just because an earnings report is coming up. As far as new positions, though, there's a lot of stuff that's working right now. I'm still finding a lot of charts that are breaking out nicely, trending strongly. If I'm looking at something that's reporting earnings this week, I'm probably going to sit on my hands until after it. It's just a big major event that's got a lot of risk to it, a lot of unknowns around it, and so why not? Especially when you pair that with a major election coming up. I mean, those two things, for new positions, I'm kind of sitting on my hands a little bit. But it's definitely not getting me out.
What's your take on kind of a move towards cyclicals, industrials?
Yeah.
Kind of a rotation. I mean, there have been people talking about this great rotation that's had false starts many times.
Right.
You think it's real this time?
I don't know. That's a good question. I have one of the charts actually that I've really been liking a lot lately. Gotta scroll through and find it here. Is industrials. I mean, look at the resilience of this move in industrials. Just a steady climber, and it's underperforming. So this chart's looking at industrials XLI versus the S&P 500 over the last year. So over the last year, they're underperforming the S&P 500. But when we look just sort of from middle of the year on, it's actually outperforming nicely in sort of a steady uptrend here of this ratio XLI versus the S&P. So, trending back kind of up towards new highs. I actually really like the move in industrials. So,
Okay.
you think of some of these sectors that are, maybe feel a little bit overheated to some people, like technology, obviously, but, even something like I had consumer discretionary up here earlier. Even something like XLY, which has been just running higher. I think that industrials move might feel a little more comfortable to people, but it's still a strong trend outperforming the S&P.
Yeah.
I mean, it's a beautiful chart right now. That
It looks like it has another high coming
I
there,
think it
that
does.
chart.
Yeah,
Uh,
absolutely think it does.
Last time you were on, I talked about my view on yields, and I was
Yeah,
talking about, that I thought yields were going to head higher, and they've started to do that. I mean, they're
yeah,
stalling at the 10-year note, stalling at the 200-day moving average up here at 80.
yep,
But we've had a decent move, and we break out. I think we're going to 1.25.
yeah,
What sectors, you wouldn't think utilities would do well in a sector like that.
sure,
What are the most vulnerable sectors? Would they be real estate related, REIT related? Say the 10-year yield goes
sure,
up to 120 to 140. What do you
sure.
think is going to be? It should be supportive for banks, right?
Yeah, should be.
I mean, I know what is, right? But
Right.
the XLF has been doing okay while yields are climbing and there's a little steepening going on.
Yeah,
What should people avoid if this interest rate scenario is, say, only halfway through
sure.
what it's going to complete?
I think you hit it with real estate. I mean, that to me is the one to avoid. And it's not just the one to avoid right now because of yields. I think it's also obviously the one to avoid because the whole global real estate environment is just shaken. I mean, when we think about, residential and commercial real estate, no one really getting into new spaces. The only sector of sort of subsector of real estate that's really working right now is all the cloud stuff, the data center warehouse type of things that are flying up. But I mean, if there's one thing to avoid, I think right now with that environment, it's real estate. So I think you nailed it there, Dale. This is the yield chart that I'm watching. So it's an interesting one because you've got the 30, the 10, and the 2, and then the Fed funds rate as well.
Right,
But you can
right.
see, kind of where we're sitting there. And the key to me on this is that the SPX yield is still higher than all of those, which is when we scroll back in time. I mean, this is a 20-year chart. That doesn't happen that often. It's
Okay.
still a remarkably unusual position to be in where S&P yields are higher than anything else. I mean, it's odd. So that this whole yield picture is just, it's out of whack to me. I mean, it's crazy. This is the chart that just really shows me, really kind of represents to me how crazy this interest rate environment that we're in is, how
Would a
unprecedented
cross
it is.
would a cross of those two imply something?
Yeah,
If
that's
the
what I'm
green
watching.
crosses the blue, what would
Right.
that mean to you, Grayson?
It's a good question. What it means to me, I think it means that we're getting back to normal. Frankly, I'd really like to see that, just because, again, look what the green relative to the blue in sort of normal times. Look how far
Yeah,
apart they are, and obviously,
yeah.
they've been trending towards each other for a long time, for 20 years. But I think what that signals is kind of a return to a slightly more balanced normal. As far as actions I would take around it, I'm not sure that alone really signals anything to me, but still I'm watching that, kind of hoping for it, actually, because it's just it's a strange environment that we're in right now. It's purely strange.
And any of the miners, because higher yields
Hmm.
are not really friendly for commodities, because it would include some dollar strengthening, and
Yeah,
it also brings in some competition, or what they
sure,
call opportunity cost. There was no opportunity cost to own
sure,
gold with yields at 50. But
right.
if we go to 120, it could change the picture. What are you seeing in the miners?
I think it could be a headwind for them a bit. But the key to me with that whole thing is that those rates are going to stay low for a while. I mean, even if they continue to move a bit higher, we're not
Yeah,
going to see returns to these sorts of levels anytime soon. So it
3%.
could
Yeah.
be, yeah, exactly. It could be a headwind. But when we think of sort of the broader picture and what normal used to be, We're still so far from that. So, maybe a bit of a headwind, but that's probably the most I'd say about it. I wouldn't worry too much, but
okay.
yeah.
So, what kind of election outcome? I know, getting the crystal ball out. Do you think it's going to go to the Supreme Court?
That's a good question. I hope it doesn't, just I think for our collective sanity. But I mean, there's so much uncertainty that, that's another reason that I'm just kind of sitting on my hands, especially watching us. I'm going to go back to that S&P chart, and here's the daily. Seeing us just kind of range bound. It's a wide range, but seeing this kind of range bound drifting sideways for the last couple of months ahead of this election. We ran up to all-time highs. We kind of tried to test it and failed, but still we're moving sideways. Ultimately, we're moving sideways, and to me, what that signals is that a lot of people are just confused and they're waiting. We're just kind of waiting to see what happens. So when I think about positioning going into this, I'm still nibbling at a few things, individual stocks that are doing well, individual charts that are, moving nicely. But as far as kind of bigger positioning things, I think that waiting until after the election is perfectly fine, because we don't know. I'd love to sit here with my crystal ball and say, hey, I think I know what's going to happen, but no one does. At the end of the day, we don't. And I think a lot of people have, when I think about the election this coming year, I think a lot of people have sort of forgotten, maybe intentionally or unintentionally, forgotten how crazy 2016 was. And before that too, I mean, with Brexit and how that shocked everyone. I mean, shocks can happen. Uncertainty is real. You never know what's going to happen. People thought 2016 was so secure and so clear, and it surprised a lot of people. So, I think that has taught me a life lesson of you never know what's going to happen. Even when you think you do, you never know. Yeah. So for a major event like this, I'd rather sit out and wait and see what happens, and then figure out how to move after.
Well, if you did that, you were smart in 2016. You could have bought the S&P limit down with Carl Icahn. Yeah. Do you like?
I know. That headline has just, it's always stuck with me. Him running. I think he left the party. Yeah, to go by. Oof. What a guy. What a move.
Yeah.
Yeah.
Do you like Grayson? Do you like cannabis?
That's been so I'm in Seattle. So I maybe have an interesting take on it, because we were, Washington was up there with Colorado. We were, the second state to legalize cannabis. So it's been interesting to watch it here in the city for, I guess it's been, 6 years now, something like that. That's just flown by. But it hasn't taken off the way that I always thought it would in Seattle. I mean, we've got some big pot shops and things like that around, and it is an industry. It's creating jobs, and people are going and buying and stuff like that. But I haven't seen that industry take off the way that I thought it would. From a sort of a business
you're not shopping enough.
I'm not shopping enough, I guess.
Yeah.
But anyway, that's the key. No one is. I don't see the people. I don't see the people shopping as much here. I mean, maybe it's they're just keeping to themselves. But from the business perspective, that's kind of one thing. But from the social perspective too, I don't hear people here in Seattle really talking about it, really making a big deal about it. And so I have not leaned into that industry as far as the markets go. Because I haven't seen the real interest from it here in Seattle, where you think that there would be such a huge interest in it.
Okay, and oil, Grayson, oil's been under pressure. I mean, every once in a while you get a heartbeat out of it, but
every once in a while,
yeah, it's still in a void for you.
It's still in a void. I mean, I want to put up two charts on that. So here, one is my sort of classic intermarket look, right? We've got a bunch of stuff. We've got gold and stocks and bonds and all that. I mean, here's oil, just a total tanker, pun intended, I guess there. So, I mean, when I look at this chart, there's one clear thing to avoid, and it's down here in the bottom of the chart of the black line. But the other thing that I come back to is, if I flip over to my sector charts, I mean, why own this? I've said this to a couple of people, energy is just going down. it's trending lower. It's kind of everything that me as a technician, it's everything that I try to avoid. A clear downtrend with falling moving averages and just not finding any life, underperforming sort of chronically. So, I would love to see XLE moving higher. I'd love to see the energy industry as a whole moving higher, and oil specifically, but I'm not seeing it. And until
they're
I
afraid
see
of the
really,
election too. Election results,
they are.
that could be,
Right.
they're pretty panicked. I mean,
They
Biden
are.
mentioned one
That
thing
industry.
about, during the debate, and I don't blame people in that industry because it's their living. So, if
that's
you'd
an
like
interesting point.
Go ahead.
So when we talk about, earlier we're talking about yields and the effect that that's going to have on some of these sectors, some of these industries. I think that the policies that may or may not come out of the election, but if there is a Biden victory, the policies that are probably going to come there are just going to be even more of a headwind for energy. So if I'm looking at the impact of rates going up on real estate versus policies at the federal level on XLE and the oil and gas industry, I think that's going to be a much stronger story.
Yeah. Okay. So, yeah. I had an interesting take from a guy I interviewed, and the reason he's looking eventually for triple digit oil is that would be the catalyst for really making green look great, because right now it's kind of break even with cheap fossil fuels. And if we went up to $90 crude, and people are paying $6 again for a gallon of gas, everyone would want to go green. So I mean, as long as there's no big price advantage, it's more of a political statement than an economic one.
Totally. I mean, I've never really thought of it that way, but if you're long Tesla, you should be really hoping that oil prices go up.
Yeah.
I mean, that's totally going to drive people to electric cars and embracing solar and all that stuff. I mean, you're right. That's, I think, the biggest, I keep using this word, headwind. The biggest headwind, I think, for the whole green industry is that oil's so beaten down. It's so cheap. It's so accessible. I think that's a great point.
I know why we have a smart group of attendees here, and DJ's saying, and it's probably one of the reasons people keep trying it, the XLE is throwing off a 13% dividend yield at the moment. And I just have to say to him, what I learned about yields early in my career is the higher the yield, higher the risk.
Yeah.
Right. So, what, this would be a good time to show how people could subscribe and get your weekly email for stockcharts.com, so they could follow some of these legends that you have on there, like Martin Pring. I mean, these are, you have guys from my generation.
Yeah, no, absolutely. I mean, we really do have an incredible list of people coming across the site. So a couple things to point out. One, stockcharts.com has always had free tools. We will always have free tools. So if you're interested in charting, you can always come to the site and just come up here, type in a ticker symbol, and get going. You don't really have to sign up for anything. That said, our most powerful tools and features, all that stuff is behind the paywall. We reserve that for our members. If you want to save, charts and lists and do all the things that really make stock charts fly, we do have a free 1-month trial. We'd love to have you join us. You can take that. You can see what we're all about. We've got lots of help docs and things to get you started. And like Dale mentioned too, we've got a ton of content from some true industry legends. We've got John Murphy up here, but we've got guys like Martin Pring, David Keller, Arthur Hill, people that have been doing this for a long time, have really been kind of figures of the industry for a long time. So our articles page, if you come to stockcharts.com, you click articles right up at the top. Tons and tons of content here for you. It's all free to read, so come check it out. There's a lot of educational material in there. You can learn from guys like Martin Pring and John Murphy and David. They all do real educational stuff. They're trying to really teach people through their articles. So it's pretty amazing what they do. But the other thing that we've leaned really heavily into this year is Stock Charts TV. So we're actually doing a lot of video content. I might get an ad playing here in a sec, but A
How do
lot
you,
of video
I know,
content.
Michelle, how do you broadcast it? Do you do live stream or
Yeah, so it's all, I don't want to get the infinite loop of death here, but it's all live streamed. We're
yeah,
doing content through Stock Charts TV via a platform called Livestream.
okay, I know it.
It's
Yeah.
streaming 24/7. So we always have content, but then we also put everything up on YouTube. So we got a thriving YouTube channel there. You can go find Stock Charts on YouTube. So it's tons and tons of content to watch, tons to read, and lots to explore. The big thing actually that I didn't get to demo today, but is something called ACP. This is our new interactive charting platform that we just released this year. So, we're doing lots of big things. This is a very sort of dynamic new tool for us. Some pretty amazing charting features and sidebar views. There's all these market panels that you can pull out.
Nice.
So, lots of
Yeah.
amazing things to play with there.
Well,
So,
everyone, especially if you're a stock trader, there's not a lot of coverage on currencies or FX, but if you're a stock trader,
Yep.
great resource.
Yeah.
And you could also follow Grayson on Twitter at Grayson Roze. And Grayson, I want to thank you for
Of course.
being here. You've become
Yeah.
my trading warrior brother, like David and everyone else who survives 20, 30 minutes with me.
Exactly.
And I wish you a lot of good fortune going forward and into this fall to winter trading
Into the
season.
unknown, right?
Yeah, the
Dale,
unknown,
thank you for
definitely.
having me. Yeah, no,
You're
it's
welcome,
it's a
Grayson.
blast to be here. Yeah.
I appreciate you coming here, edifying and sharing your views with
Yeah.
F.A.C.E, buddy.
Thanks, Dale.
Okay. All right, everyone. Grayson Roze. We'll see everyone tomorrow for Turnaround Tuesday. We'll see what happens. Kind of comatose today. And we're headed towards the finish line. Thanks again, Grayson. And remember, everyone, don't just count your pips, your gains, whatever you count materially in these times, count your blessings, and we'll see everyone tomorrow. Adios. You're very welcome, guys.